Hi, Ken from Avvora, and today I wanted to talk about borrowing capacity. So if you're out there in the market looking to buy a property, it's always good to know how much you can borrow. So there are certainly plenty of calculators out there from specific lenders to generic websites. Alternatively, a broker can also go through a borrowing capacity with you, and generally speaking, we can do that specific to a lender if we've got your full financial details and gone through your specific financial position. One thing that I would mention is with the borrowing capacity, a couple of things that you can look at to increase your borrowing capacity is to check your credit card limits. So if there are credit cards that you have which you don't necessarily need, you can consider reducing the level of limit or alternatively cancelling that credit card altogether. And another thing is also personal loans or car loans or things that may have interest rates which are substantially higher than your interest rate for your home loan, and to package that in if that's something that you could possibly do, because that'll increase your borrowing capacity and reduce the interest payments for those particular loan amounts. They are looked differently by lenders generally speaking, and the home loans are assessed with a buffer, generally 7 to 8% sensitized interest rate. However, with personal debt or car loans or anything like that, the floor assessment rate or sensitized rate might be significantly higher than 7 or 8%. The last thing that I would probably say to look at borrowing capacity, because the differences between lenders can vary, anywhere between as little as 20,000 to 70 or 80,000 from the highest borrowing capacity that a lender will give you versus the lowest one. So it can be a significant amount. And the other thing to look out for, apart from reducing your expenses, is to look at your income. So some lenders have credit policies where they take 100% or 80% of things like your overtime, your allowance, and any bonuses. So that's important to take into consideration as well when you are looking at applying for a home loan with a particular lender, because although a rate might be cheaper with a particular lender, lender A, lender B might be offering something like 80,000 more in terms of borrowing capacity, and that 80,000, when you're looking out there in that particular area, will make a substantial difference. So it might be an idea to go with lender B versus lender A. So that's just a quick tip just around borrowing capacity and what you can do to increase your borrowing capacity. If you have any questions, just let me know. Drop a comment below. I'll see you tomorrow.